Hey friends, welcome back to the Wealth Planning Podcast with Brister Law. It's a show where we don't just talk taxes, but we talk about real wealth building strategies. And today we're talking about one of the most polarized but misunderstood tools in the tax game. That's the short-term rental loophole. Now, if you're a high-income W-2 earner, like a doctor, attorney, engineer, and you've been told that you can't use real estate to offset your taxes unless you're a full-time landlord, then this episode is going to flip that script. Because with short-term rentals, there is a workaround, a legal one, and it's extremely powerful. So let's start with what separates a short-term rental from a long-term rental. And it comes down to material participation and your average stay. If your average guest stay is 7 days or less, the IRS says it's not a rental activity. That means it's treated like a business. It's not passive income, which is everything you're trying to use those losses to offset your W-2 income. To unlock the short-term rental loophole, you don't need to be a real estate professional, but you do need to materially participate. And here's a secret: there are multiple ways to qualify. The most common way to qualify for material participation is spending 100 hours and more than anyone else managing the property, or 500 hours total, or substantially all the work on the property. If you or your spouse hits one of these and you use a cost segregation study plus bonus appreciation, then boom, you can wipe out your W-2 income. I had a client. He was a surgeon in California that made close to $500,000. He bought a short-term rental. We used a cost seg and accelerated over $150,000 in bonus appreciation. And because his spouse hit a 100 hours test, and with guest communication, managing the property, they were able to offset over $120,000 of W-2 income. That dropped their tax bill nearly $40,000 to under $5,000 with one property in 1 year. Now let's talk about how people accidentally blow this up. They hire a full service property manager. They're not tracking their hours. They're missing the 7-day average stay. This isn't a loophole that you stumble into. It's one that you have to strategically plan for. And if you're thinking about doing this, or you already own a short-term rental, don't go at it alone. We build tax game plans and strategies every week that include this strategy. Apply for the short-term rental tax game plan session, and let's just see how and if this works for you. And if you want a full breakdown from cost segs to compliance, download my free bonus appreciation guide. The link's in the show notes. And if you found this helpful, please hit that subscribe button. Don't forget to share this with someone who's paying way too much in taxes. I'll see you next time.